Welcome to the Sunday edition of the 2023 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me. Please be sure to subscribe to this channel for the latest interpretation of financial news in the United States of America. And we thank you for your support here on the channel. Today, we're going to be just talking briefly about the inflation that's continuing to run rampant above 7%. Some experts feel that the inflation will be lifting away later on this summer, May, June, July. Others feel the inflation will continue, and the recession probability, meanwhile, is inching higher and higher according to the Y charts exhibited. So we're going to get into that briefly here today. So right now, according to MarketWatch.com, inflation in the U.S. could turn, quote, negative by mid-year. This is billionaire investor Barry Steinlich, a risk that the Fed will keep lifting interest rates anyway. So this article implies that according to they had the global conference, the conference in Davos, Switzerland, as you know, a couple of weeks ago. And he predicts, he's CEO of Starwood Capital Group. He says, quote, and I quote, inflation will go negative in May or June because the housing equivalent number is positive. The risk that the Fed Chair Jerome Powell keeps going. The risk is that the Fed's Chief Jerome Powell keeps going, meaning that he keeps rising rates in spite of the data that they get. Now, we have to remember, ladies and gentlemen, the data that we get on these reports are 2 months behind the actual, what the economy is actually doing. In other words, the data that we got from December 2022 is actually 2 months behind. It's actually what was going on in October 2022. So that's the way the data works. So everybody is spending these markets to be a positive thing, that we're going to come out of a short recession, we're getting a soft landing, quote unquote. But the data points otherwise. Job inflation, job numbers were weak last week on Thursday. It came out at 8:30 a.m. Eastern time. Job numbers only created over 160,000 new jobs last month in December. And CNBC.com is reporting that the key Fed inflation measure eased in December, while, quote, consumer spending also declined. In other words, people are buying less non-essential items in the economy, and that is very, very concerning going into 2023 and 2024. But we have predicted this since last year. I was telling you about how once the jobs can stagnate, the wages have been stagnated the last 25 to 30 years, that the Americans, all of us, will cut back on spending, whether that's on discretionary spending or extemporaneously spending, extra spending, like, say, cutting back your cable bill or cutting back your phone bill to a couple of phones, or cutting back your leisurely travel expenses. Everybody is feeling the pinch, and everybody is not just in food, and everybody talks about the eggs going up, of course, and other things, but people are feeling the pinch, and they're making the appropriate adjustments to their personal budgets. So while personal budgets and our expenditures are going down, the government is still spending a lot of money on, as you know, to sending money to different parts of the world, Ukraine, and other conflicts that we have going on in the world, and our over 850 U.S. bases that we're supporting at this time. So all of that, coupled with what's going on at the homeland, means that the United States has a great chance of going into a recession here. As you can see the Y charts here, it puts us now back up to a 47.31% chance of a recession. This is probability compared to last month. It was at 38.6%, as you can see here on this chart. So we're creeping upward towards a 50-50 chance. This is higher than the long-term average of 13.83%. And this will continue to be the case, ladies and gentlemen. As you can see throughout here, we're creeping up. We gained, look at that, we gained over 12 percentage points in just 1 month, from November to December. And this value is going to continue to go up because a recession is likely on the way. It's just how bad and how much interest rates are going to go up. How much does the Federal Reserve Bank, Jerome Powell, raise interest rates up to? Many believe only at 5% because we can't pay our debts as a nation. That's what they claim. I believe they're going to go higher. Paul Volcker didn't stop, as you know, back in the 70s, late 70s and 80s, early 80s. He didn't stop till he got to about 19, 20, 21%. Will we get that high? Only time will tell. But it's clear that rates are still going to be going up throughout the rest of the President Biden's term and possibly into the next term, whoever is the president after 2024, 2025 timeframe. So we're going into a slowdown, but the United States is going to be the one leading the way into the slowdown as being the major world's largest economy. And this is going to spell consequences. And that's not counting a major conflict, a black swan event, not just what's going on in Ukraine, but let's say if China gets involved with Russia or India or some other country gets involved into this conflict that we have around the world. That means more money spent on providing those services, and that means less money for the homeland structures, infrastructure. Everything goes down. and that spells a severe recession of 5 years or more. But we've been preaching that for the last year. You guys have heard it here first, and it's nothing to be afraid of, but it's something to be prayed up about and be ready for. A slowdown in spending, expenditures, both personal and the government expenditures as well, for social services and programs. So be blessed. Enjoy your time out this week, this break this week, as we kind of close out January and head into February. God bless. I'll talk to you very soon. Thank you for listening. Peace out.